All right, let's go to Wall Street now, where stocks waver in the wake of a so-called trade framework announced between the U.S. and China. And as new data shows, inflation ticked higher last month, though slightly less than economists expected. The Dow dipped today. And if you take a look at our top 500 stocks, this is our interactive heat map brought to you by FinViz. As you can see, there's a bit of some red dragging down the numbers today. CBS News MoneyWatch correspondent Kelly O'Grady joining us live at the New York Stock Exchange. So, Kelly, tell us about the data and the reaction that you're seeing on Wall Street.
Right, so the CPI data, that's something that the Federal Reserve and all of us watch very closely. The inflation rate came in at 2.4%. That's compared to 2.3% in the month of April. And what that tells us is we're getting further away from the Fed's 2% target, which is not what anyone wants to see. But as you said, it came in lighter than expected. So we did expect to see a little bit more of an increase. A couple things I want to highlight here. One, this is the first increase we've seen since 3 months ago. And there were some indications that we're seeing a little bit of tariff impact start to flow through to consumer prices. We saw vehicle parts as well as appliances. So think washing machines, dryers. Those, of course, are things that we import. But it wasn't as high as expected because energy prices actually fell a full percentage point versus the previous month. And that really dragged down what could have been a higher than expected inflation report. How investors reacted, I mean, the Dow was pretty much flat. All the major indexes were pretty much flat. And that's because it was better news than expected. But there's also just a lot of uncertainty about this trade deal, whether both sides are going to approve it. So a number of different factors, Jules, that investors weighed today. They got a lot of data.
Yeah, absolutely. Okay, Kelly, it looks like a trade deal with China is back on the table. Is this the trade framework that investors were hoping for?
No.
Okay.
I think investors were definitely excited to see both sides talking and that they walked away from the table with some kind of agreement. But the businesses and investors that I am talking to, were hoping to see the tariff level lowered from where it is. Remember, we've got a 30% tariff still on Chinese goods coming into this country. That is on top of a 25% tariff that was put on a certain amount of goods, not wide sweeping under the first Trump administration. So businesses are still having to pay a lot to import goods. What does that mean? That means in the next few months, that inflation rate that we just talked about could creep up even more. It also means a lot of businesses, a lot of public companies, that's what investors are focusing on, are now thinking, okay, this tariff didn't come down. Do I still source from China? Do I go somewhere else? Do I invest in the U.S.? I think investors wanted to see that number come down, and they also wanted to see more specifics. We don't have a lot of details. They're very much scarce, and we also do know we've been here before where there's been similar moments back in 2018 where things looked good. Both sides said, yep, we've got a deal. Then they went home. And a few weeks and months later, the trade war was back. So investors kind of have a little bit of a fool me once mindset. However, they're cautiously optimistic.
Okay, good information. Kelly O'Grady. Kelly, thanks so much.